you can kind of make your way down, and there's lots of seat in the front too, and that's where most of the chocolates are, in case anybody's missed those. Representative Bobby here is the one who took that front seat, which is great. So first I'd like to introduce myself and the couple speakers that are going to be speaking here today. My name is Erez Bahar. Over here to the left is Rob Schultz and Dan O'Brien, and we all work for Davidson and Company. So we'd like to welcome you. Thank you for coming. I understand it's still pouring right outside, but that's November for Vancouver, isn't it? So I was thinking about this last night, and I figured this might be the second largest gathering of accountants in Vancouver this year for 2009. When you really think about it, there's probably about 130 accountants in this room, and it's really only second to the CA Marks exam night, which is really next week at the Roxy nightclub. I think the Roxy nightclub before CA Marks come out is probably the biggest gathering of accountants. So this is number 2. So you should be happy to be here as part of that. So today we're throwing about approximately a 2-hour course. It's going to go for about an hour and a half and maybe an hour 45. And really the reason why we're here today is just to give you a little bit of an introduction to IFRS. Most of you probably already know that it's coming to Canada, that you have to adopt it soon, that you have to start thinking about it. For us, this course is only an introduction. The people who are here are our clients, and we're going to do more of these as time progresses for the coming year. So because you are our clients, we always want you to feel free to contact us with any considerations, questions, or suggestions that you would like to have see as our client, or what sort of better service we can provide you in order to transition into IFRS. So I'm going to give a little bit of introduction. Rob here is going to talk about sort of the nitty-gritty differences between Canadian GAAP and IFRS, and Dan will go over certain issues such as timelines and when to adopt, etc., etc. So of course the acknowledgement disclaimer, the materials that you've got in front of you are for yours to keep. If you want to make 1,000 copies and pass it along to all your friends, please let us know beforehand. And on the next one. Okay, so the agenda. So why are we here today? So my part first, so I'm going to give you a little bit of introduction to our IFRS committee at Davidson and Company, sort of what our mission is and what we're really here to do. I'm going to tell you a little about what is IFRS, who has to adopt it, and some important audit committee considerations that you want to go through over the coming year. And then Dan will speak about the timeline, financial statement presentations, MD&A, and what are some implications if you're a US filer, i.e. if you file with the SEC on top of Canada. And then Rob will get into some of the detail. And this course is really meant to represent your type of company, which is tailored to sort of a junior mining or junior company traded, particularly on the TSX. So we're only going to focus on the issues that we feel are important to most of the people in this room. And a lot of them have to do with the first-time adoption, mineral properties, share capital, property, plant, equipment, related party transactions, and then we're going to get onto some other notable issues as well with IFRS. So what is it? So about a year ago or so at Davidson, we formed a committee, and it comprises of about 8 members. And each team member of our committee comes from a different section of the firm. We have representatives from the audit side, from the small business side. We even have tax guys coming into our meetings every once in a while. And so for most of our clients that are here today, you will likely have a representative from the IFRS committee that works on your file. And what our purpose was is to make sure that we have sufficient amount of people within our firm that can tailor to your needs. And our mission, of course, was first to educate ourselves and for us to understand what IFRS is and what sort of implementations we have to do as a firm. And now we're at the stage that we're here to sort of pass on some of that information on to you. And really what we want to do is help you starting from basically today until the point that you actually have to transition and making appropriate disclosures in your financial statements and your MD&A, etc. Because the more you learn today and in the following months, the easier it'll make our job as well as we review your quarterlies and your statements, etc., etc. One of the things that we've begun to do is also make on-site visitations for any clients that want to educate their board of directors or the audit committee to give them some information. Because as you will later see, your audit committees will have to have a person or persons who have sufficient knowledge in IFRS in order to comply with the audit committee rules. is IFRS? Well, it's a high-quality principles-based framework. So if you remember, Canadian GAAP is a principle-based framework as well. US GAAP is really just rule-based. In the US GAAP, it sort of tells you you need to do this, and that's the only way. And in Canada, we've always had a little bit more exercise on professional judgment. And IFRS really steps that up to the next level. IFRS is very much a principle-based framework with a lot less rules and exceptions. So what that really means for you is that it gives you a lot more choice. And for us, that's important because a lot of clients are in different industry of different sizes. And so the ability to use professional judgment in both in the GAAP and the GAS part is quite important. So you will find as you start familiarizing yourself more and more with the IFRS standards that it's not subjective, but it allows you for choice and professional judgment. Next one. So this is some interesting information for accounting. I always, every time you look at the handbook, you've got accounting sections, you've got EICs, you've got accounting guidelines and auditing guidelines, and you always wonder who sets these things. So every time you're going to see the acronym IAS, it's going to mean any standards that were implemented before 2001. And any ones where you see IFRS, it's after 2001. So IAS and IFRS are really the same thing. It's just the names of the boards that were implemented before 2001 and after 2001. So for example, you'll see IFRS 6 and 7, but you might see IAS 22 and 21. So they're not different. They're the same. It's just different acronyms for the organization before and after. And similar with the interpretations of it. Interpretations would kind of be like an EIC. So the SIC was before 2001, SIC, and then after 2001 is the IFRIC, the International Financial Reporting Interpretations Committee. So that's what that means. This is an interesting chart too for accountants because in Canada, the way it always used to be is that you'd get a discussion paper out for maybe an exposure draft for a new ruling or a change in accounting, and then you'd circulate out to the public once, and you let the public give back their opinions on it, and then you sort of publish it. Well, the whole concept of IFRS is that it's going to involve a lot more consultation from accountants, and so the discussion papers and public feedback is going to be implemented both in the beginning and the end. So it just gives you the ability as an accountant to get more involved in new IFRS standards if you so wish to do so. And then next one. So what is IFRS? So this is an interesting map. This map shows you which countries have either adopted IFRS or are already in the process of adopting IFRS. The ones in blue are the ones that are either adopted or are in the process of, which includes Canada, as you can see, pretty much all of Europe, Australia, Sub-Saharan Africa, a great part of Latin America. I'm pretty sure that country in the white there, I think that's Colombia. And I was trying to think to myself why Colombia didn't adopt IFRS yet, but I can't quite speculate as to why that is. And of course, notably, is that Ecuador? I think it's Colombia. I looked it up on the map before I came, so I had to make sure I had it right? But it could be wrong. But of course, notably, it's the US that has not adopted IFRS yet. And we think that a big part of that is because US is so rule-based that it's just going to take them a long time to sort of converge with IFRS. And right now there's the IASB and FASB, which is the US side of it, that are working together to kind of try to converge the two together. So US will get there eventually, but right now not in the next 3 to 4 years. Other notable places were not that important. I just find this map interesting, right? You got Argentina who hasn't adopted it yet, and then India as well. And of course all the white shades are countries that haven't yet, but Ghana has, which is interesting. There's quite a few clients who have operations in Ghana. So interesting to see that the world is definitely heading that way. So there's a reason why Canada is adopting it. The next one. So of course the big question, who's got to adopt it? Well, pretty much everybody in this room is involved for the most part in a public company. So everybody has to adopt it as of January 1st, 2011. Now of course that's over a year away from now. And the reason why we're holding a course such as this now is because you have to start thinking about it. And the transition period begins January 1st, 2010. What that means is that when you adopt IFRS in 2011, you have to restate your comparative numbers for 2010. And that's why they call it the transition period beginning January 1st, 2010. So any differences that you may think you have between Canadian GAAP and IFRS, you need to start thinking about them now, because when you do fully implement it, you'll have to restate your comparative numbers if you have any differences. There's also recently private enterprise GAAP that's been approved. That's not something we're going to get in detail in this course, because for the most part we're dealing with public entities here. But private entities also will have to choose IFRS or private entity GAAP at the same time. Private entity GAAP is kind of like that differential reporting that you may have seen. So it just really allows you to disclose a lot less than IFRS. For the most part, public companies have to adopt it January 1st, 2011. This is another question that I often get from my clients is, how am I going to start learning about IFRS a little bit? Like, where can I go to start reading some of these new sections, and how can I educate myself in trying to reconcile to Canadian GAAP? So if you go on a CICA website, you'll see it subdivided into 4 categories, and then you'll find all the IFRS literature as issued by IASB. You're going to find another section for private enterprise GAAP, and then there's going to be another section for other, such as non-for-profit, public sector, and government. And then lastly, there'll be the CICA handbook. So the CICA handbook is really what we use now. And then, but you'll also see all the IFRS pronouncements. Now those two are actually under separate links, so they're not converged as of yet. But right now you still want to use the CICA handbook. But to familiarize yourself with IFRS, I'd recommend start reading some of these new standards. Next one. And another question I typically get is the hierarchy, because, for example, in US GAAP, you'll see there's FASB pronouncements, and then you've got EITFs, and you've got all these different boards, and I often get the question, which one do I use? What is the priority of standards in my GAAP? Well, the first 5 points are pretty much IFRS. Of course, your first point of reference is going to be the IFRS standards and appendices, and then there's the interpretations, and then there's appendices not part of the standard, implementation guide, and conceptual framework. So that's pretty standard, the first 5. The important one to note is the last one. Pronouncements of other standard setters when no conflict. And I'll give you a quick example. Flow-through financing is very common to the junior market, and flow-through accounting for income taxes is a subject that currently is not addressed by IFRS. So a question that I've been receiving lately is, what if I do a flow-through financing, but I don't have the guidance under IFRS to account for it? Well, what that point number 6 says is that if you can't find it there, then you look at it for your local GAAP. So that will be the general, and as IFRS develops more and more and converges with Canada, we believe that there'll be more standards, and all these issues will be addressed. But that's what you want to think about if you're reading IFRS and you can't quite find what you're looking for, because IFRS has, I think, 37 standards, whereas, of course, Canadian GAAP has various sections in EIC, and in the US there's hundreds of them, right? There's like 200 pronouncements just on revenue recognition. So IFRS is going to be simplified. There's really only 37 pronouncements that are going to deal with pretty much all accounting issues that you can think of. And then the next one. And just really briefly on audit committee considerations. So just like right now, in your audit committees, you need to have a financial expert, and that's the person or persons who can read financial statements and understands GAAP, et cetera, et cetera. You'll have to do that with IFRS as well. So some of the things that you want to start thinking about in your next audit committee meetings is to document some discussions you're having with management, i.e., what are you guys doing to implement it? And have you identified any potential differences between Canadian GAAP and IFRS? And I think that if you start documenting some of these discussions in your minutes of your audit committee boards, then once IFRS kicks in, you can show to the regulatory bodies that you've done what you needed to do in order to gain the expertise in that area. And one of the recommendations that we have, because we often attend the audit committee meetings, is for us to give a little blurb on it too, and potentially have some discussion with management, board of directors, or audit committee members as well. And the next one? No, that's it for me. So that's about it for my part. So now Dan is really going to give you an overview of when and what you have to start saying in your financial statements, MD&A, etc. So Dan O'Brien.
Thanks, Erez. Okay, so up here we have basically a timeline over the next couple of years. Starting December 31st, 2011, that'll be your first annual financial statements that you'll have to prepare under IFRS. Should say that obviously all of you don't have December year-end, so if you had a February year-end or a March or October, of course you're moving into 2012. But I'll just speak as if we're dealing with the December year-end, just because that's the first one that's going to be coming into play. So just looking at 2011, on the your first quarter, your March 31, 2011 financial statements, that's the one that you're really going to be in your next phase working towards. That's the one that's your first set of financial statements that's going to be under IFRS. There's going to be a lot of disclosure that's going to be required in those statements, and reconciling with the Canadian GAAP and sort of things. I'm going to touch on that a bit later, but that's really that March 31, 2011 financial statements is the one you should be looking out at and thinking, okay, that's the one that is going to probably cause me the most amount of work at this point. Okay, so as Erez mentioned, on January 1st, 2010, that is your transition date. And the reason that date's important, as he said, is because you're dealing with comparative numbers. So anytime you're filing anything under IFRS in 2011, you're going to have your comparative numbers will be your 2010 numbers, which will need to be in IFRS. So obviously, be in Canadian GAAP up to that point. And also the other thing about that date and why we're having this course today is there are some things that you're going to need to decide at this point. For example, what IFRS changes are there going to be, what that are going to affect my financial statements, and how is IFRS 1 going to affect my financial statements. And Rob's going to touch on those points, but those are really the things that you need to be looking at now, and that's why those items are sort of important now. When we get to, let's say 9 months from now, or something, that's when we'll be really focusing in and looking at financial statement presentation, and what are those March 31, 2011 statements going to look like. I'm going to touch a bit on that in a little bit, but that's that. So that's sort of the timeline over the next couple of years. Go to the next. So financial statement presentation. In a nutshell, under IFRS, your financial statements are going to be a lot bigger than they are today. The disclosure is going to, for a couple of reasons. One, you can imagine over the next few years when you're transitioning from Canadian financial statements to IFRS financial statements, there's going to be a lot of comparative numbers and a lot of reconciliations that you need to put into the financial statements. You're going to have to explain all the changes that you're going to have to do. So over the next few years, there's a lot of disclosure that you're going to have to add to them, strictly from the point of view that you're switching accounting policies from Canadian GAAP to IFRS. But even down the road, you go down a few years when we're not dealing with Canadian GAAP anymore, there's no comparative issues to worry about, they're still going to be bigger. IFRS disclosure requirements are much more detailed than what we're used to right now. So kind of overall, they're just going to be a lot more detailed. Now, as far as what guidance is there out there right now to help us with disclosure, it's relatively limited at the moment. There is an IAS 1 that is out there, and it does touch on a number of the items, which I'm going to go through in a minute. But as far as the level of disclosure you guys are thinking that you would need right now, it's just we're going to have to sort of wait and see over the next while what sort of happens. They're expecting, actually in the second point here it says 2010, but they're actually expecting a revised IAS 1 to come out in 2011. Okay, so between now and 2011, hopefully there will be some discussion papers that are out and disclosure drafts, things like that we can draw on. But as far as a revised IAS 1, which is the main area where we're going to look for disclosure, it's not going to really be to 2011. So guidance is a little bit limited, but hopefully we get more over the next 12 months. The other item that's a bit tricky is that often, you guys know, whenever you're doing financial statements and maybe you have a new account that you haven't really dealt with before, and you're wondering, how do I disclose that? We can, obviously, you can talk to us, of course, but what you often do is you look at financial statements of another company that has that thing already. And so the same thing goes on now. People are looking at other countries, primarily Europe, that has used IFRS, and so they'll look at a set of those financial statements. Just, I'm sure some of you have done this. You're curious as to what they're going to look like. But there's a bit of confusion there. Is when you look at those statements, do they look like that because that is required under IFRS, or do they look like that because that's just the way they do things in London or in France or where the statements you're looking at? So it's you have to be a little cautious about, just because you see a set of financial statements from another country doesn't mean that's the way they're going to be exactly. A lot of things are going to be, but it's just something to be aware of when you are looking at those other statements. So I'll just take you through some of the items which are definitely being discussed. I wouldn't commit to a lot of these for 100% positive this is the way it's going to be necessarily. We'll certainly be able to nail that down again over the next 12 months. But as of today, what guidance do we have? What's been said out there? What are people talking about? So those are the items I'm going to go over now. Your set of financial statements, just looking at the statements, not the notes. Really, I've got them listed here. We're going to be looking at 4 statements. Balance sheet, from most of what we've seen, the name to be changed to the statement of financial position. Again, that's a common thing in Europe, but can you call it the balance sheet? Does it say specifically you have to call it? It doesn't currently right now. It might, it might in 12 months, but as of now, but that's definitely something that, don't be surprised if it does go that way. Statement of comprehensive income. We sort of have this right now, but what it does say in IS1 is that you can have 2 statements or you can have 1 statement. So you can have a statement of comprehensive income, which would include obviously your income statement and then go into comprehensive income, and that's a common thing we have now. Or you can have 2 statements. So you can have an income statement and you can have a statement of comprehensive income. So then I don't think that's too much different than the way we have things right now. Statement of changes in shareholders' equity. I know that some of you, some companies have this and some don't. It's sort of an optional schedule. If you don't have it up front in your notes, in your share capital note, you'll deal with it there. It will be a statement that you're going to have. So there will be 4 statements added as a general rule.